Indian economic updates.
The government is preparing to establish an inter-ministerial mechanism for effective monitoring of employment-linked incentive schemes aimed at generating new jobs in labor-intensive sectors. The Labour Ministry is designing a plan to prevent leakages and ensure timely benefits for all stakeholders. The focus will be on identifying employers in industrial clusters such as textiles, leather, plastics, and food processing, encouraging them to expand their workforce. The 3 schemes, set to launch by December, are intended to be attractive to both employers and job seekers with minimal regulatory burdens. Administered by EPFO, the schemes are part of a larger initiative to create employment for 41 million youth over 5 years. The government will provide wage subsidies, reimburse employers' EPFO contributions, and incentivize bulk hiring in the manufacturing sector. Banks have approached the RBI to advocate for higher deposit insurance coverage for senior citizens while seeking relief in premium payments for insuring other retail deposits. Following an internal meeting last month, lenders decided to formally present this proposal to both the RBI and the government. Currently, deposit insurance is capped at 5 lakh rupees per depositor per insured bank, with the Deposit Insurance and Credit Guarantee Corporation managing the system. Banks argue that this coverage should be increased for senior citizens, given their financial dependence on bank deposits. Factors such as inflation and life expectancy warrant periodic adjustments to the insurance amount. A proportionate minimum coverage could be established if the RBI and the government agree on the proposal. Bank margins are expected to remain under pressure in the second quarter due to rising deposit costs, with limited loan growth, particularly in unsecured retail loans. Analysts expect net interest margins to contract as deposit repricing continues and loan yield expansion slows. Private sector banks may see flat or minor margin declines, while public sector banks could better maintain margins due to their loan mix. HDFC, ICICI, and Axis Bank are expected to post modest profit growth. Rising slippages from unsecured loans and higher credit costs are anticipated. Loan growth has slowed, and deposit growth remains range-bound, affecting liquidity ratios and overall profitability. The government may soon tighten quality norms in response to rising imports of substandard steel, particularly from China. Following an October review by the Steel Ministry, it was revealed that India's steel sector faces increased vulnerability due to global trade diversions. In the first 5 months of this fiscal year, India imported 3.45 million tons of steel while exporting 1.92 million tons. The government aims to expand quality control orders, restricting imports of steel grades not produced locally. India currently imports 4,200 crore rupees worth of non-Bureau of Indian Standards compliant steel annually. Amid rising imports, particularly from China and Southeast Asia, the ministry launched an anti-dumping investigation into Chinese cold-rolled electrical steel.